Hey, what's good, guys? It's KYV, and today we're going to talk about OTE. So this is a very, very important concept, honestly, because this can really make a difference in your entries. And I'm gonna be going over it today. I'm gonna show you what it is, how to set it up, and yeah. So right off the bat, I'm gonna just show you guys. This is the fib tool on TradingView, and this is our OTE projection. So I'm gonna just go into this setting so you guys can copy it or whatever. All right, and to explain what this is. So first we need to know about equilibrium, which is basically just the 50% of a range. And what that means is whenever we have a retracement, so as you guys know, to move higher or lower, we gotta have some retracements on the way. So like this, for example. So these retracements, they either go back into premium or discount. So if we anchor OTE, this just marks out the levels of a premium or discount. So like right here and right here. As you can see, these numbers on the fib, we have the 0.5, which is a 50% discount, 62%, 70%, 79%. So these are just levels where price could reject off of because they're the most optimal entry points and the most likely within a discount range to reject off of. So using this, we can really narrow down entries and avoid taking entries too early to get a higher RR. So let's go look at this example right now. So this just formed. As you can see, we filled this new day open gap and we start moving up. So if we were to look for an entry, if you were gonna go bullish, you would just mark out between the low and the high. So swing high and swing low. So it would look like this on a line. And if you were to mark it out on the candlestick chart, it would look like this. So right here, as you can see, we do tag into the 70% discount, which does align with this order block. Boom, right there. So that could have been a potential entry. So whenever you look for OTE, you kind of want to find a PD array that aligns with this. So right here could have been a potential entry. As you can see how it wicked through instead of having a full closure, that is very ideal. We want a wick rather than a candle closure below discount levels. And I find that the most golden range is actually in between the 0.62 and the 0.705. So right here. And we don't have any PD arrays there, but yeah, you get the point. So let's keep going. Let's find some more examples. So that's not really a good example. Let me find a little bit of a better example. Alright, so honestly, yeah, right here is not too bad. Let's see. So right here, as you can see, we have this range. So we have a high and a low. So we want to anchor it since we're anticipating price to be more bullish. And with the 50%, we have this fair value gap aligned a little bit below consequent encroachment. And we also have this fair value gap. So if you wanted to get a potentially more higher risk to reward trade, you could have entered here where the 0.62 is, but as you can see, you wouldn't have gone filled. You would have missed that. And if you chose to go with the fair value gap that's within the 50%, you would have gotten filled. You would have gotten ticked in, very minimal drawdown, and then runs to the target. So I'm going to go over one more example. I'm going to try to find a bearish example of OTE, which honestly right here is not a bad example. Yeah, so honestly, yeah, right here is a pretty good example. So as you guys can see, we have high and low, and we want to anchor it from the 1 to the 0. So 1 would be at the top, 0 would be at the bottom in a bearish scenario. And we're just looking for PD arrays. So what do we have? We have this suspension block. that's about all I can see in this setup. So that suspension block aligns with the 0.5 and also the 0.62, and I believe it is actually right in the middle of that, if I'm not wrong. Yeah, so the consequent encroachment is right in the middle of this range, so a very good entry would be where you just have the consequent encroachment of this suspension block, and you can target wherever, so you can go like a 1-to-1 right here. That would have been a pretty good trade. And yeah, right there. And just another tip, whenever you're entering off of OTE, you want to make sure that your stop is protected by being above any of these levels of discount. So like here would be, or like here or here. Usually sometimes if I wanted a better risk to reward, I would put my stop at the candle body rather than the wick. But in this scenario, that would be very bad stop placement. So you'd want to have your stop like right here, a little bit above the levels of OTE. And as you can see, that drastically changes your risk to reward. So you can actually also use OTE on a higher time frame. So just go right into that. Go at like the 15-minute. And this one's better for like, yeah, I'd say for like higher time frame reversal. So you can catch, like, you can form a bias with that kind of. So let me find okay, right here, honestly, this is a pretty good example. So right here we have this 15-minute range. And right off the bat, what do we have? We have this mitigated 15-minute gap. And we do also have this order block. So for simplicity, we'll go with the order block. If you guys go body or wick, whatever. And that aligns with the 70%. So within this range, if we want a retracement, we could look for the 70%, so the consequent encroachment of this order block, and then we could scale down on time frames, and this could be our key level. This right here, we could wait for a tap and then a reversal off of this level. So I'm not going to scale down because I'm probably going to lose this like this day. But yeah, right here, that would have been a great way to anticipate a lower time frame trade or like a bias. So right here, boom. And that could have been a great trade to take. And this honestly works on any time frame. So even like if you went to the daily time frame. So let me mark out an example. So if we have a big range like this one right here, we don't actually, I don't think we do go into the 50. Oh no, we do. Yep. So this range right here, I believe we barely tap in. We don't quite tap in, but it did go pretty close to 50%. It's whatever. But let me look for another example maybe. But it really does work on any time frame. So look, like right here, this range on the daily time frame, we hit the 62% of discount, which is aligned with a daily suspension block. Well, I'd consider this FVG because I do believe this was a new week open gap. So just consider that as a fair value gap. And there's also, yeah, so this right here, this, you can see it works on the daily time frame too. And yeah, that's about it for this video. So OTE, great tool for lower time frame entries and higher time frame reversals. It's honestly very underrated. It is getting a little bit more like attention now, but yeah, it is a very good concept to add, and it's not too complicated. It just strengthens your trading, so I'd really recommend adding it into your trading. And that's about it for this video, and I'm gonna see you guys in the next one.